What's up, party people? So, exciting news. We got our direction right for the dollar and the indices. If you go to the channel and you watch the video I have posted, I think it's only posted for returning viewers to the channel. So if it's your first time looking at the channel, a different video will pop up, but it's in the playlist future or like long-term projections anyway. In that video I said that I wanted to see this act as an order block and then see more downside. I made that video on Sunday night and I'm pretty proud, pretty happy about it, because we did have these two levels that I thought we could retrace to, but I was pretty confident that we were going to roll over right here. I also am pretty proud because what was I going to say? Oh, anyway. It panned out just how we talked about in the weekly forecast, taking this low off of rolling over off this order block. If you can see what that means for indices, so for the S&P, let me clean this up for you. I talked about a while ago, I talked about down here how we were going to take that high. I'm targeting these highs next. And the question for today on this daily candle print is how does today play out? How high does it go? You got to be very cautious on news releases like this, because when it pumps so early at 8:30, there's not a lot of candlesticks, and there's not a lot of swing highs and swing lows to kind of build a narrative off of and kind of make some analysis. Remember, price only moves for two things: for inefficiencies and liquidity. So we have to map out those things for our upside. You can see on the 4 hour we are in this very big SIBI. So that fib I had in the chart was the quarter levels of this SIBI, and I mapped that out because depending on where if this 4 hour candle closes above one of these lines, I will expect it to go to the next one. So excuse me, we already came up and broke above this top quarter line. If we close above it, if we can close this 4 hour candle above it, I think we will go higher. We could, what it also can do. Let me take this off. Price can also just kind of shoot up and stay sideways, and it'll eventually come up and go higher. But just when it chooses, it could be during the lunch hour, it could be during the PM session, it could be whenever it wanted. So we can't get too hooked on that. But for levels, if we see an opportunity, we'll take it. But again, we don't have a lot of swing highs and swing lows to work off of, so we got to be cautious. We can't just jump into anything. If you notice, I drew out this order block level. It's really a daily order block. It's these last two up close candles prior to this down close. So if you look on the 4 hour even, it just looks, here it is on the 4 hour. And then I have this swing high because I think we could come up and clear out these highs. Kind of looks like a shelf. So we have the order block and then the buy side. And the only thing in between where we're at now and those two levels are this fair value gap, which we've already dug into the upper portion of it. So I think we will probably at least hit that order block level. When does this candle close? The 6th. So this candle will close at 10. Perfect timing for the silver bullet. If it closes above this orange line, I think we'll definitely go for that order block level at the least. The way I'd want that to pan out though is So here's the 5-minute chart. I'd honestly want to see it come down and get it tap into. So this is one giant BISI fair value gap. I'd want to see it at least touch into there, act really responsive off of it, like so much so that you can just tell that it's like it like wicks into it and then immediately just becomes a wick and fires off. And then I'd want to see it create some swing high. I'll draw it out for you. I'd want it to go wick into that, but just be a wick. Then come up, tap down, come up like that. And we'd probably find fair value gap in there. And then for added security, we'd probably enter on like a retest, just because I'd want to see some structure that makes me think we're making higher highs and higher lows to take this after dipping into this inefficiency. We might not get it, so just know that we might not get it. We could just drop, but I'm not. Again, this is not a time when you want to look for shorts. It wouldn't even be smart to look for shorts. Like, you have to. No, I don't. No shorts this morning. So that is ES, and let me show you NASDAQ. Go to the daily on NASDAQ. NASDAQ is very close. It actually took one of those highs that I mapped out in the quarterly shift video. So we took this buy side. This buy side is next. No. This buy side is next. And what I'd do is probably just draw out the consequent encroachment of that wick. Drop down to the 4 hour. We're so close to it. I'd be shocked if we didn't take that. And if we didn't take that, then we're 100% taking it in another day. But yeah, even for NASDAQ, as you can see, if you go to the 4 hour, then down to the 1 hour. So it might be hard to see for you guys, but this black dotted line is price. That's where the level price is at. There's nothing really in between where we're at now and this buy side level. You have this big candle up, big candle down. There's not much in between. So yeah, I would also be looking for something similar along the lines of what I said to ES. I think the afternoon could definitely be good, just because between now and the afternoon we'll print a decent amount of swing highs and swing lows that we can kind of work off of. But if you go to the dollar's dropping. This was a pretty significant low. This was a significant low that we took right here, but then it took a few days to retrace, and now that we're below it, we got a lot of sell side to clean up on the dollar. So dollar sell side, we already took that. We have that next. We have that for sell side. Next is that. Then we have these inefficiencies inside of here. We're currently taking significant level, the sell side. So yeah, we have a lot more sell side to clean up, in my opinion, which I think either today or tomorrow we'll get those indices above these highs, and definitely I think we definitely have to take this buy side on ES. Cool. Yeah, I mean, not a lot to say, really, because we don't have a lot of data to work off of. Yeah, so because of that, not a lot to say because we don't have a lot of data, which means we do have to wait. Wait and be patient. Yeah. In terms of upside, I'd probably want to see I'd have to see some kind of shift in structure on the 5-minute before I even consider the longs. But I will be right back. I'm going to go get more coffee. I am a little nervous about how close NASDAQ is to these highs compared to ES. ES is pretty far away. I think, again, how these markets take those highs is significant. So if we saw NASDAQ take these highs and then we started to see some kind of some signs of like a reversal, I would consider that a pretty large SMT on the daily chart. And when if that happens, we'll go over it then. But once these highs are taken on NASDAQ, I will probably be cautious. I'm wondering if it almost like I could imagine NASDAQ, the distance between where we are now and these highs for NASDAQ, I feel like could move like it's the same distance that ES is from these two highs. When were these highs? Friday, September 1st. Okay. I almost had to double check to make sure I wasn't mixing the highs up. Okay, let's see what the open gives us. Again, just to prepare you guys, this is going to be a lot of just quietly sitting here and watching. We're going to have to wait for some structure, some swing highs and swing lows. Whenever I say structure, I'm just talking about swing highs and swing lows. So we're going to have to wait for some structure to be formed to then start to build something off of. I kind of gave you the explanation of what I'm hoping to be hoping to see formed. If you want to scrub back a few minutes, but yeah, so this opening range is going to be a lot of me just sitting here quietly waiting for structure. I'm not a performer. I'm not a performer. I'm not one of these crazy YouTube guys. I'm also not just gonna talk about a bunch of random stuff that isn't actually significant just to make noise. Yeah. Maybe draw out this opening range. It's absolutely giant. There we go. So I'll talk about why this is so hard to trade, because if you try and go long, where are you going to put your stop loss? You're going to have a 200 handle stop loss at the bottom of that low? No. You have the next high isn't until right at that low. You could put it at the bottom of this candle if you were entering on that fair value gap, but I mean, there's no reason why it can't enter into this fair value gap. And then at least for our concepts, we can't really consider shorts until we take this buy side. If we get above that buy side, you could put it on the table. I probably wouldn't look at it too closely, even if it was on the table, but you have to take that buy side first before you consider any kind of downside. So what's happened so far is we've come down and tapped the top of the opening range gap. Saw these bodies kind of respect it. I could see it going up for this buy side now, but we'll see. Again, I wouldn't be surprised if it could stay sideways for a while. So what I've seen so far is we came down, tapped into it, closed these two bodies, but then these two bodies, the candle bodies respected the top, so you can see them closing on the top. And at this candle, we broke above these two swing highs. So that's technically a shift in structure. And you can see the next candle comes down and taps the top of this, treats it like an order block. We get sensitive off of it, come up, then we continue higher. So I made this swing low, swing high, swing low, another, making a baby swing high. That's not enough. I think I'm just kind of explaining the way the candles are printing, but it's not enough for me to get confident on entering anything. Came up, took that swing high. See what ES is doing. You can see here on ES the bodies of all these candles respected that top of that opening range, the top of that opening range. We have that order block level I called out, and then the next buy side level above that. This gray line right here is a old new week opening gap that was less than one handle in width. So I'm pretty sure I just put a line there. Not super ideal. Don't recommend that, but see the dollar is kind of melting downwards, similar to how the indices are just melting up. A lot of movement, so the market, they gotta digest it. So what you're seeing now is a little bit of an example of something I was I tried to take a trade off of, or I did take a trade off of it yesterday. So I talked about how this down close candle act as an order block, and then you want to see the rest of them all kind of respect each other. So this one came down, touched the top of that one, came up, made a new swing high, came down, touched the top of that one, came up. I'm guessing we'll possibly come into this little fair value gap. Don't have to come up. So once we take that level, things will get a little tricky. You know, we had that level, we had the opening range gap. We kind of had like we had a little bit of structure in the sense of, you know, we had a level to see price react off of and a destination for it to go. But on the 4 hour here, you can see above that high, there is not much, at least on this 4 hour, there's no inefficiency. The next one is a volume imbalance right here. On the daily, we have this SIBI. Yeah, so a lot of big levels. Just gotta wait. See what the market give us some structure that we can base something off of. take a look and see what ES did on that move. Yeah, so on that move, ES came up and tapped into that daily order block I had lined up, these two up close candles. And then ES has that high up here, which I think it can go for it. ES is looking, it's showing a little more strength than NASDAQ, as you can see. I think it's, you know, the six sister concept kind of coming into play. You can see it's moved a little more aggressively off of that opening range gap. Came up right to the top of that line. Hold tiny new week opening gap. I'm going to take a look at the dollar. Yeah, so the dollar, so we have the 4 hour, our current 4 hour candle closes at 10, and it looks like it's most likely going to close below the sell side liquidity, and then the next level is the sell side liquidity. So if we do get a close below that, I will expect the dollar to be retracing lower to take that. If the dollar retraces, so that's just a little sign that we could see some more upside for the indices. No sign of a reversal. coming into 10 o'clock, if you noticed, I called out this 15-minute order block, which lines up very nicely with these three 5-minute down close candles. Just wanted to map that out. It stuck out to me. I don't know if on ES we would retrace that far. I think there's not much in terms of inefficiency between, this green line and up here. In terms of NASDAQ, the 5-minute chart looks a little differently, but if you notice on the 15, we still have that down close candle, but then we have this candle coming down and touching the top of that, and I'm wondering if that's going to act as an immediate rebalance to send price higher. So I think if the next 15-minute candle prints and we start kind of moving upwards, that's the context of that upward move. Still nothing really in terms of like a setup. I am expecting the dollar to take this sell side liquidity. Okay, so ES looks like it's going to take these highs, these buy side highs in the 4-hour. But I'm not seeing much in terms of inefficiencies for us to pull back on. You could call out a few order blocks, but nothing jumping off the page. We're not too far from it. We're about 5 handles from it. I hate it when prices like this, when it's like there's no real swing highs, even in the 5-minute. Like, look, there's no swing low or swing high. It's just like a staircase up. It makes it very hard because you don't know. It makes it hard to gauge like pullbacks and I think we'll probably just do exactly what price has been doing, up to that green line, and that's not really enough to justify an entry. It's kind of a gamble. Again, I said at the beginning of the week, Wednesday, Thursday, Friday. Well, not Thursday. No, Thursday. Wednesday, Thursday, Friday are going to be, without a doubt, the best days to trade. So we took that loss yesterday. Reflecting back on it, I noticed the losses that get me really emotional are the ones where like I had the whole analysis and narrative right, and it's when I put my stop too tight and I get stopped out, and then price runs, and those are the ones that get me really frustrated. So we hit that. We hit that level of buy side. See what NASDAQ did. And sometimes this is trading. You just kind of watching price move without you. And I guess you got used to it. Because I feel like there was a time when I would get, like, sometimes I would just, there were times where, like, if I, like, really thought I was going to go to this place, I would just enter, and, like, I wouldn't care how it got there. It's just like, I know it's going to go there, but, like, we could have justified, like, it came down, it touched the top of this new week opening. I don't even know if it's a gap, it's a line. Came above it, came back down, touched it, but that's not our model, And I would have like so much anxiety because it's like, where do you put your stop? You put it at the bottom of this down close candle, at the bottom of this down close candle. So you just kind of watch. Wait and watch. terms of NASDAQ upside, this volume imbalance really is what's next. I mean, we have these, I think we have a daily, yeah, you know. We're in this daily SIBI, but we're in this daily SIBI, and technically, so this is sell side delivery, and to rebalance it, we need buy side. So price will often come back up, and it'll deliver buy side in the form of a wick, and then come down, and you know that's the idea around fair value gaps. And you can see here, so if it delivered sell side and this wick gave a measure of buy side, notice how this wick had to come higher than this wick because the new fair value gap is that. And the same thing goes for what we're seeing now. Since this delivered the buy side, it's a long time in the making, but now this is the new fair value gap. So that's where we're at now on the higher time frame. And again, we just have to wait. We have to wait for more candles to print, more structure. Because so when I say structure, we have to wait for more structure. We printed more candles, but I mean, excluding the 1 minute, how many highs and lows have we made on the 5 minute? We have a swing high, a swing low, and then the next one is all the way up here. We need more. When I say we need more structure, what I mean is I want more swing highs and more swing lows to form, because you know that's, at least for me and how I trade these concepts, that helps me a lot. Like which swing highs and lows we violate and which ones we don't, really lend to my narrative. So kind of what I was saying. So we came up and we put 3 wicks above that buy side, and we're retracing. But how far are we going to retrace? You know, if you were somebody who was if you were really itching to get in here, you can't just take this first fair value gap. You can't even take the second fair value gap. You could look for an order block, but which one? Well, that's not really an order block. This is not really an order block. This, I think, and you can see, I mean, I guess it's hindsight because we stopped at it and I wasn't able to call it beforehand. I would say this is the first thing that I would truly want to call an order block. You can see we're tapping into it now. But that's still not enough for me to enter in on, even though we have dropped a decent amount, you know, but dollar is in this fair value gap. Looks, so this is, see, the dollar is printing some structure right now that I'd be like, oh yeah, it would turn around. Like I wouldn't want to see it violate this high. And this is the only fair value gap in between this high and this low. So when we enter into it, I would now expect it to come and take this low. So actually the dollar is kind of lending to the idea that this might have been the PD array that price is retracing to for the discount to then send it higher. But still, I still want more, and so we trade the silver bullet in this 10 o'clock hour. That would be entering off a fair value gap. I mean, that would be entering off of an order block. So it's still not our model. I'm not going to even think about entering this one, this SIBI, because the dollar's dropping, and I'm expecting the dollar to take that sell side liquidity. what I would like is, so we came down to a specific point in order block. I would like us to make like a swing high on the 1 minute, come down, not break this, but make a lower low, or a higher, a higher low, come up, break that swing high we made, form a fair value gap, and then you could enter in on that because you'd have 2 swing lows for like stop placement. I don't think that's going to happen. I think we're probably going to shoot up pretty aggressively. Some people might use that as an inversion. We could see how much I like that idea. Mainly because I really think the dollar is going to take this sell side, which I think could give the indices a little pop. Just remember though, we don't pick tops and bottoms, so not even thinking about going short. And if you are like really like itching to go short, then I think my personal opinion is you still haven't broken away from that gambler's mindset, because when I look back on like my mindset, because there was a time when I'd be like, oh, like it would be so nice to just pick the top and like short it down, look how much room it would fall. And that like hope and that idea that like, oh, you can make so much money because there's so much room for it to fall, that's like gambler's mindset, because there's been nothing in the price that has indicated that it wants to do that yet. So you're just kind of crossing your fingers for an outcome. You're just rolling the dice. Let's look at NASDAQ, not the Dow. Yeah, this is difficult. You could get the idea that you'd want to like short off this fair value gap, but remember, price it's not supposed to just go in straight lines to targets like this, so we need to expect pullbacks for continuation. So it could pull back all the way to about here just before it wants to send it higher. And then, at that point, it's like, you're picking a top and a bottom because you're picking this swing high is going to be the turning point for the pullback, and then you don't know how far it's going to pull back, and that's just like a really hard trade to manage. And then understand how markets, so when the market turns around and creates a swing, it'll do it in only two ways. So I'm going to draw this over here on the left. It'll either make a high, a low, and then a lower high, or it will make a high, a low, a higher high, and break. So I don't know if this is as self-explanatory as it makes sense to me, but the market can only these are the only two options for a reversal. It can either make two highs, one that's bigger, one that's high, the second one higher, or the second one lower. These are really the only two options that structure can present. So that's why I wouldn't even short this fair value gap right here. You saw those candles printing in it, but I still wouldn't think that it's really holding off price, because it could be this second scenario forming where you go at high, low, you're gonna make a higher high, and then we'll break. I don't know why it does that, but anyways, yeah. So shorting off this fair value gap still wouldn't be a good idea, because you're just kind of guessing that it won't run this high one more time before breaking. And then if it does make that, say we do make a higher high and then break below this low, that could still just be a pullback on the 5-minute. We haven't even made it. We've only made one down close candle on the 15-minute too. So you don't need to trade. Like I said, Wednesday, Thursday, Friday are going to be the good days. So, I mean, we took an average size loss yesterday. So if we know, if you're confident in your ability, you're saying Wednesday, Thursday, Friday is going to be good price action. Like, I know I'll be able to find a setup there. Why would you trade Monday, Tuesday? Say you have 2 red days, then you're just spending the rest of the week trying to pull yourself out of drawdown, and you'll end the week either break even or like a small green, when you could just end it on a big green if you decide, I'm not going to trade Monday, Tuesday. The dollar, you can see it looks like it's not wanting to take that low just yet. Again, you know, it can take it. I still believe it'll take it, but the timing is what we can't force. Could happen between like 11 and 12. Could happen over lunch. You could save it for the PM session. We don't really know. So, but we did just make a higher high on the dollar. So I would be it's another thing that would make me sit on the sidelines. Now that we do have some swing, because what's going to happen is if the dollar is, so the dollar was kind of trending nicely in the morning, you know, but now that we broke that trend with this higher high, until it takes this low and continues the trend, you know, it could just, it's technically range bound until we get out of this, either break above this swing high or below this swing low. And it could do it within the next few minutes, but I'm expecting ES and NASDAQ to probably do something similar in the sense where they kind of might go into a little consolidation before leaving it. And that'll be good because we'll get that structure that we've been talking about. But we can't get too hasty and still jump in a trade. So this yellow line in the background is the dollar, in case you are not aware. So I'll be watching to see if it takes that low. As you can see, NASDAQ is still playing around inside of that fair value gap. ES made a new high, so we're having a little bit of an SMT. The dollar did make that new low. Dollar made that new low. It is a little concerning that NASDAQ didn't make that high, especially because NASDAQ has been the leader this morning and on the daily chart. If the dollar was to take this sell side liquidity level and then aggressively reverse, and ES got below, made a shift in market structure on the 1 minute and got below this 5 minute down close candle, and NASDAQ, and it keeps this SMT where NASDAQ doesn't make that higher high, and NASDAQ also makes a shift and gets below this, its down close candle, I would consider shorts. Again, that's a lot. But that's like a whole narrative. That's framing a whole scenario. And I say all that because we have this SMT happen at a pretty specific level. The dollar, again, this is all based off what the dollar does, because if the dollar continues to go lower, then the indices will cave and go higher. but I'd be pretty nervous about any long trade with this SMT happening on NASDAQ, and because both the NASDAQ and ES have reached such high time frame targets. Like this is a 4-hour buy side we're taking right now after moving all this distance. So it's kind of like a smaller time frame fractal version of when I say like we reached the daily target. Well, I guess it is that exactly. Like we reached the daily target. So the highest probability move is over. Yeah, so if you wanted to use that as an inversion, you could have gotten 5 handles. That would have been the silver bullet. I'll label that one because it's not an inversion. That right there. There you go. A little silver bullet. NASDAQ looks like it's going to go for that high. Again, this is one of those scenarios where part of me was like, okay, I was like thinking about an entry, but it would really just be like a small scalp because when you're basing, if you're like trying to build an entry right now off this 1 minute structure, it's off of 1 minute structure, so you have to keep that in mind. Whereas on the 5 minute and the 15 minute, we haven't even made a swing high on the 15 minute. So for example, if you base a trade entry and it makes sense on the 5 minute too, because like remember, price is fractal, so think of it all in ratios, whereas a pullback on the 5 minute, it's in the way. A down close candle on the 5 minute can be 10 handles, 8 to 10 handles, whereas your average down close candles on the 1 minute will be 3. I'm not using those numbers like specifically. I'm just saying the ebbs and flows on the 5 minute and the compared to the 1 minute are just larger. So if you frame something on the 5 minute and you map out some 5 minute targets, you can expect the probability of getting more handles is likely, versus if you map out a trade idea that's only on the 1 minute, then you really have to know exactly how each swing high and swing low needs, what it means, to make sure that you timed it right. NASDAQ is making a new high. See, these candles came down. It's after a value gap. The dollar took that swing, or that sell side. So in terms of the dollar, I'll be looking for the next sell side and area of inefficiency is this fair value gap right here, and you have these swing lows right below it. So the top of this fair value gap is the bottom of these swing lows. So you could also draw a little sell side liquidity. You know what? I'll just take this one. Put it there. That's the next level, assuming it wants to continue lower. Again, just melt ups like these are hard. They are hard, and you know, there has been like a few levels where I'm like, if you were to do anything, it would be here. So I mapped out this order block. We came up through this fair value gap, and I was like, you could use it as an inversion if, you know, we're expecting higher prices. We're not trying to pick a top, but at the same time, all these ideas for entries in a structure like this, they're not, in my opinion, they're not the best. They're not super high probable. I feel like, I don't want to say you're chasing price, but it's not high probable. That's what I'll say. Yeah, so look at the 5 minute. This is a very hard structure to trade. And like I said earlier in the stream, you know, some people might see this and get really, like, feel a lot of FOMO. I think that's normal, but it's something you need to graduate from. And in hindsight, these ideas, these like levels, you know, we could have scalped 5 to 10 handles off them. And that's really easy to say in hindsight. But I think you need to trade based off of the probabilities of what's going to happen in the future. So if it's like, yeah, in hindsight, it did this. It came up above this fair value gap, used as an inversion to go higher. But when I was watching that print, I've just watched price print enough where I'm like, there are scenarios where it is way more likely to do X, Y, and Z. Or there's like scenarios where it's like, if it does this, it will do that, or I'm 100% wrong. But when this was printing inside here, there were just so many scenarios. There was just multiple scenarios where you'd be watching that, and you're like, it could do this. It could do 2 different things and still be like under the narrative that it's going for this draw, this buy side. So if this buy side is the target, it could maneuver around this fair value gap in 3 different ways just to get there. And like, what's the probability that you are going to execute and then manage the trade appropriately? NASDAQ, it played out a little better. You can see it. But then even, let's compare the highs and lows to NASDAQ and ES. So on ES, you have this low. On NASDAQ, you have this low that came below this swing low, but that didn't happen on ES. See? So even though you wouldn't have entered really until you got above the fair value gap, but on NASDAQ, that delivered 20 handles. Yeah, so I think that was the silver bullet of the session. Again, if we hadn't, moved so much off the 8:30 news, I think that could have been a little more obvious. It wasn't really anything in this, say, this little clump of price. It was the fact that this clump of price was where it was. It was so high above an up move versus, like, say you saw this price action and what really happened was you had like this. Imagine this was like a level of sell side liquidity from like London, and price dropped down, broke above higher, made this market structure shift. That would have been a nice silver bullet entry. But the context of where this price is means a lot. And yes, it did deliver in hindsight, but hindsight doesn't mean much. Which is also why I feel like so many people have like these big, especially on like Twitter, are like making these big Twitter accounts based off of like ICT's concepts, because like the concepts are so good because in hindsight you can map out a reason for why everything happens. And all these people are like mapping out all these hindsight trade predictions, or they'll like trade it, and if it like, they won't trade it live, but if they trade it and it works in their favor, then they post it. And like that's really easy to do, and it's really easy to like make it look good. Okay, yeah, I'm gonna log off. I hope I've said enough to kind of explain, why you'd be better off just waiting for a different scenario. And again, remember, in hindsight, you might see a bunch of people that they did this, or they might have traded this silver bullet, or they might have done this, and just don't get caught up in that. This is very hard price to trade. And for example, I think I'm being very transparent with you guys in that this is all happening through a demo account. And I think most of you probably understand that if I was to log into a real broker, it wouldn't change much besides execution fees and costs, the fees. But just know that you can open up so many different accounts under paper trading or a demo. You can even have multiple live accounts. Somebody could have 2 live accounts, and they'll take 2 entries today on different accounts, and whatever one so they're just kind of throwing stuff at the fan. Whatever one sticks, that's the one they post. But it's a whole different scenario when you're doing it live, and you can't, and every day you have to show the account balance. I think it's kind of one of the reasons why I started this channel, because I feel like it's something that isn't oversaturated with these concepts right now. I could be wrong. I don't really I haven't really looked through YouTube to see how many people are doing this prior to me starting it. I kind of, once we had the channel going, I started getting recommendations on some stuff, but I feel like I haven't seen too much still. Okay, yes, I am now logging off. I'm excited for Wednesday, Thursday, Friday, because I think those are going to be the best trading days of the week. I am, depending on how the structure is, I could possibly come on for the afternoon, and hopefully we'll get a little more to work with, a little more of a narrative than just it's going up. Again, I usually like to look for sweeps of liquidity before market structure shifts. So we haven't even there hasn't been any kind of consolidation or sweep of liquidity, and that's when I feel the most confident. So hopefully during the lunch hour, we'll see maybe a pullback, a consolidation, and then based off of some kind of lunch consolidation going into 2, we can set up a narrative and trade off of. But enjoy the rest of your day, guys.